Imagine this, Trump's tariff war is tearing global markets apart, sending shockwaves through property markets worldwide. Housing affordability is collapsing. First home buyers locked out, staring at a future they'll never own. But amidst this chaos, a select group of smart investors are quietly cashing out their property equity and pivoting into opportunities that most people can't even see. Today, guys, I'm going to show you exactly how savvy investors are using property cash out strategies to tap into private equity. That's right, private equity and property trusts. And these asset classes are offering massive discounts right now due to market turmoil. Right now, guys, here's your roadmap. Why private credit and property trusts are secretly booming. How the tariff war created huge discounts in these sectors. Practical formulas and real-world examples to get you started. And before we dive in, guys, this is not financial advice. This is just my humble opinion. Please do seek independent legal and tax advice before jumping in. Remember, guys, don't be a noob. After all, this is just a YouTube video and a TikTok video, and I don't want you just to rely solely on social media for your financial advice. Okay, guys, firstly, what exactly are private credit and property trusts? And why are they attracting savvy investors? Right now, private credit involves lending money directly to businesses, bypassing traditional banks. These loans typically offer higher returns due to high risk profile, especially when market volatility crashes traditional returns. Now, you might be asking, what is property trusts or real estate investment trusts, REITs? Well, these REITs, they let you own shares in professionally managed real estate portfolios, giving you stable rental income and potential for capital appreciation. So you must be asking now, hey Q, why are these opportunities available now and not before? Well, guys, recent market turbulence triggered by Trump's global tariff war has crashed investor confidence at the moment, especially in consumer-focused sectors. And fund managers like Tim Canham from Balmoral Investors highlights this perfectly, guys. Tariff disruptions are causing volatility. Investors need to question if the model of producing goods cheaply overseas is still viable. Consumer stocks are getting hammered, but property stocks are unaffected directly by tariffs. Right now, they have been oversold and right now are offering significant opportunities. Simply put, guys, in English, property trusts have been discount gems hiding in plain sight. So right now, guys, let's get practical. Let's look at GDI Property Group, a prime example. They manage 18 commercial properties, primarily offices across New South Wales, Perth, and Queensland. Now, this is the formula for net tangible assets, NTA, when you're considering investing in REITs. So let me break it down. NTA equals total assets minus total liabilities divided by total shares outstanding. So guys, you're watching this, you're like scratching your head, oh my God, this is so complicated, Q. Stay with me, guys. Let me apply this formula to this GDI property group that I have talked about in this example. Right now, the company's announced NTA per share is $1.19. However, guys, if you do a bit of research and look at their share price and look at their PDS, which is their product disclosure statement, their current share price is just 62 cents. That, guys, who are watching this, is a whopping 48% discount. Essentially, if the company sold all its properties tomorrow, you'll receive nearly double what you pay for in shares. It's like buying $1 for 52 cents. Now, right now, guys, Trump's tariffs have triggered economic uncertainty, pressuring central banks, including Australia's RBA, Reserve Bank of Australia, to potentially cut interest rates further. Now, if you're watching so far, you might be asking, what does this mean for property trust, Q? Well, guys, with low interest rates, it means reduced financing costs. For example, guys, a typical REIT leverage sits around 30 to 40%. If interest rates drop just 1%, our REIT could save millions in annual financing costs, boosting profitability and dividends. Plus, guys, investors losing out on bank deposits or bonds due to falling yields will naturally shift back into REITs and seeking stable income. This further, guys, pushes property trust value higher. Now, guys, let's look at the private credit market. Take the KKR Credit Income Fund, for example. The current market price is $2.40 per share. And how I work this out is using the NTA formula that I showed you before. Or you can simply go to their website and do your research. Their current NTA is $2.41 per share. Now, guys, that's an 11% discount. Similarly, there's a company called Metrics Credit Partners. This company is managing $23 billion in assets. There's another company called Metrics Income Opportunities Trust, 15% discount. Or another one called Metrics Master Income Fund, 3% discount. And the list goes on, guys. These discounts mean you're buying a lower risk debt investment below liquidation value. It's like buying a secure loan for what it's actually worth. Now, right now, guys, here's a playbook my investors are using right now. Again, guys, for those that's watching this, it is not financial advice, but step one, guys, cash out and refinance their property, unlocking equity while valuations remain high. You can do this with your PPOR, which is your prime place of residence, or your investment property. Step two, diversify strategically. What you could do is reinvesting this equity into heavily discounted private equity or REIT opportunities. So right now, guys, if you're still confused, that's why you're watching this channel. Let me break this down. So right now, you have a $3,000 equity cash out at a 6% mortgage rate. It'll cost you roughly interest only $18,000 a year. When you invest this money into REITs, or private credit that is currently yielding around 8 to 10%, this can produce you a return of investment of up to $30,000 annually. So when you do those numbers, what is the net result? Well, guys, that's positive cash flow, boosted by diversification, not just in property, but in these shares. And with this strategy, there's a significant upside potential when the market stabilizes. Because look at this, guys, historically, over the past 5 years, quality REITs delivered around 7 to 10% annual returns. And for private credit funds, like Metrics Credit Partners, they average between 7 to 9% annual returns. If you don't believe me, I dare you to Google it and you'll see the data for yourself. I mean, guys, even during the volatile periods, these investments maintain income stability far better than any equity markets. And this is thanks to loan covenants and stable rental income. I mean, guys, with Trump's tariffs, rising global tension, and the housing affordability crisis, this mix of crap over here has created confusion and fear. And unbeknownst to the average people out there, us smart investors, for us, this is also a once-in-a-decade investment opportunity, but only for those ready to act. So right now, guys, if you want to move beyond just surviving economic turmoil and really start thriving, not financial advice, but I do it myself, consider leveraging your property equity into strategic assets like private credit and REITs. So right now, if you watch this video so far and you're curious and you're like, oh, that sounds cool, Q. Well, guys, I preach this on my channel. If you want to build generational wealth and end a generational poverty curse in your family, I suggest you book a strategy call with me, either a 15-minute strategy call or a 60-minute deep dive. Right now, with my A-team, buyer's agent, financial planners, and accountants that I independently work with, we're not a one-stop shop. We have independence with each other, so there's no conflict of interest. Let us make the market disruptions your greatest investment win. And before I let you guys go, if you love this video, smash the like button, hit the subscribe button, and hit the bell notification for future videos like this. And until next time, I'll see you on the winning side. And thank you for watching another episode of That Property Roast.